Imagine if your trading account could think and act like a top fund manager, staying calm and rational during market booms, and making decisive moves during market panics. What would that experience be like? Professional fund managers never put all their money into a single asset. They understand the wisdom of asset allocation, dynamically adjusting the proportions of different assets to achieve the best balance between risk and return. The classic strategy we are sharing today is a perfect example of making this professional investment philosophy accessible to everyone, giving ordinary investors the asset management skills of fund managers. Welcome to the Inventor Quantitative Strategy Deep Analysis channel, dedicated to breaking down the most cutting-edge digital currency trading strategies for everyone. In traditional financial markets, stock and bond prices often show a negative correlation. The stock-bond balance strategy helps investors find the optimal balance between risk and return by dynamically adjusting the allocation ratio of stocks and bonds. When the stock market is hot, sell stocks and buy bonds to lock in profits. When the stock market is down, sell bonds and buy stocks to bottom fish. This contrarian wisdom fully utilizes the seesaw effect of these two asset classes. The dynamic balance strategy we are introducing today transplants this classic concept to the cryptocurrency market. Through intelligent coin cash allocation adjustments, it achieves steady asset growth amid market ups and downs. The 24-hour, non-stop trading nature of digital currency markets and their extremely high volatility provide much richer and more frequent rebalancing opportunities for balanced strategies. The core idea of dynamic balance strategy comes from traditional financial asset allocation theory, but it has a completely new interpretation in the digital currency field. The strategy dynamically allocates funds between digital assets and cash by setting target position ratios. When coin prices rise and cause digital assets to exceed the target ratio, the strategy automatically sells coins for cash, locking in some profits. When coin prices fall and cause digital assets to drop below the target ratio, the strategy actively uses cash to buy coins, reducing the holding cost. The unique aspect of this design is its adaptive nature. It does not rely on fixed price ranges, but dynamically adjusts based on real-time changes in asset values. Compared to traditional grid strategies that need preset price ranges, balanced strategies have stronger adaptability and continuity. The strategy ensures timely response to market fluctuations while avoiding cost losses from overly frequent trading by setting rebalancing thresholds and minimum trading intervals. The parameter design reflects the adaptive wisdom of balanced strategy from traditional finance to digital currency. The target position percentage is equivalent to the stock-bond allocation ratio in traditional portfolios. The default 50% setting embodies a balanced approach of offense and defense, meaning half the funds invest in high-volatility digital assets while half maintain the safety of stablecoins. The rebalancing threshold is the key regulator of strategy sensitivity. The 5% setting means position adjustment only triggers when actual allocation deviates 5 percentage points from the target. This design ensures response to important price movements while avoiding frequent trading from small fluctuations. The trading ratio controls the magnitude of each position adjustment. The gradual 2.5% adjustment reflects the steady characteristics of balanced strategy. The minimum trading interval prevents overtrading in extreme volatility, protecting the long-term stability of the strategy. Here is the indicator definition section. The calculation method for target position value ensures that no matter how the total account value changes, the target allocation of digital assets can adjust dynamically. This is the key for balanced strategy to adapt to market fluctuations. Current position value is calculated by multiplying position quantity by real-time price, accurately reflecting the current market value of digital assets. The most core innovation is in the position deviation calculation. It uses relative percentages rather than absolute values, allowing the strategy to maintain consistent performance across accounts of different sizes. Positive deviation means digital assets are overweight and need position reduction to lock profits. Negative deviation means underweight and need position increase to build positions. This design allows the strategy to automatically execute buy low, sell high logic, achieving intelligent application of traditional balance strategy in the digital currency field. Compared to grid strategies with fixed price ranges, this value ratio-based balance mechanism has stronger adaptability. The signal generation mechanism embodies the core wisdom of balanced strategy, executing contrarian operations at the right time. Trading interval control ensures the strategy will not frequently adjust positions due to short-term market noise. This is especially important for digital currency markets, because crypto market volatility is often more intense than traditional markets. The three signals each have their role. Initial position signal ensures the strategy can start normally and establish target allocation, equivalent to initial asset allocation of traditional portfolios. Add position signal activates when coin prices fall and digital asset ratio is insufficient, embodying the value investing philosophy of buying on dips. Reduce position signal triggers when coin prices rise and digital asset ratio is too high, achieving timely profit-taking risk control. The strategy execution section transforms balance theory into actual trading operations. Initial position building uses target value divided by current price calculation, ensuring the first position reaches ideal coin cash allocation ratio. Both adding and reducing positions use fixed fund ratios rather than fixed quantities. This approach reflects the professionalism of asset allocation strategy. Each position adjustment uses a fixed percentage of total account value, ensuring that regardless of account size changes, the relative impact of adjustments remains consistent. Every trade has clear identification, making it convenient to analyze strategy execution effectiveness and optimize parameter settings later. The visualization design intuitively shows the entire process of dynamic coin cash balancing. The blue target line acts like a portfolio allocation benchmark, always staying stable. The orange actual line fluctuates with market movements, reflecting real-time changes in digital asset allocation. The most exciting part is the deviation bar chart design. Green bars indicate coin price drops causing insufficient allocation, requiring selling cash to buy coins. Red bars indicate coin price rises, causing overweight allocation, requiring selling coins for cash. This color coding perfectly corresponds to contrarian operation concepts in traditional investing. Bar height directly reflects deviation magnitude. Higher bars indicate more urgent rebalancing needs. Through this visualization design, traders can clearly see how the strategy automatically executes buy low sell high operations amid market fluctuations, achieving long-term asset appreciation goals. Starting from the core mechanism of balance strategy, let us analyze its performance characteristics in different market environments. In high volatility sideways markets, prices repeatedly fluctuate within ranges. The strategy performs best here, with each price movement triggering effective rebalancing operations, achieving continuous buy low sell high profits. For long-term value investors, dynamic coin cash allocation can achieve effective risk diversification and return optimization, maintaining relatively stable asset growth amid market uncertainty. It is important to note this is a strategy that needs long-term accumulation. Short-term fluctuations may cause temporary losses. Investors must have enough patience to wait for strategy effects to show. For instrument selection, the strategy works for spot and perpetual contract varieties, but not for futures with expiration dates, because expiry delivery would interrupt strategy continuity. For advanced applications, you can combine macro trends to dynamically adjust target position ratios, optimize allocation weights based on market cycles, and achieve overall balanced allocation in multi-coin portfolios, further reducing single asset risk exposure through diversification. Let us comprehensively evaluate this classic dynamic balance strategy from a professional asset allocation perspective. Strategy completeness performs excellently with complete parameter settings, signal generation, and execution logic. It successfully transplants traditional financial balance concepts to the digital currency field, but lacks protection mechanisms for extreme market conditions. Risk management reflects the core advantages of asset allocation, effectively diversifying risk through dynamic coin cash balancing, but may face opportunity costs in trending markets. Adaptability is the strategy's outstanding advantage. It does not rely on fixed price ranges and can adapt to various market environments. Understandability is excellent. The strategy logic comes from mature traditional financial theory, with clear and easy-to-understand concepts and clear parameter meanings. Innovation is reflected in successfully transforming traditional stock-bond balance into coin-cash balance. This application migration of classic concepts has important practical value. Practicality evaluation shows the strategy has solid theoretical foundation and broad applicability, especially suitable for medium to long-term value investors. It should be noted that this strategy mainly serves as a basic example of balance concepts. In actual application, it can be further improved and optimized based on specific market experience and personal needs. Welcome everyone to explore and experiment more on the Inventor platform.